President Donald Trump, in his announcement, was saying these $200 billion tariffs that he's asked the USTR to look into will come to fruition if indeed China doesn't step back from the $50 billion that they announced on Friday. They've now said that they're going to protect their interests, and if the US goes ahead, then they're going to do more. What happens from here?
Well, I mean, in my opinion, that China made a mistake on Friday in matching the U.S. tariffs. We went down this road in April where the U.S. said $50 billion, China said $50 billion, the U.S. said, okay, $150 billion. And the same logic applies. Because the U.S. runs a big bilateral deficit with China, it can apply tariffs to a lot more goods. China can't go to $200 billion. It can't go to $250 billion. So what the Chinese should have done, and what I think they'll do now, is target other U.S. interests. There are U.S. companies in China that can be targeted. Chinese students pay a lot of money to U.S. universities. That's a target. So there are a lot of options for China. They shouldn't have gone down the simple tariff road. I think they'll move toward other options to defend their interests that don't involve tariffs and a trade deficit.
Okay, what type of options are you talking about? If China does come back and says, yes, they're going to protect their interest, what could we expect?
Well, I think, if the idea here is to say money for money, the U.S. is talking about very large dollar figures. There's a dollar figure sitting out there that's very easy for China, which is to deny the $44 billion Qualcomm NXP deal. We've been talking about that for months, and it's a simple target for China. The Chinese have been investigating very recently foreign semiconductor firms. They can interfere with U.S. franchisees in China, cars, food, you name it. So because there's a long U.S. corporate presence in China, you have a lot of targets of American corporations which affect the stock market and which create political pressure in the U.S., but which don't go at President Trump's top priority, which is the trade deficit.
So, Derek, tell me, you're thinking that China could have taken other options as opposed to tit-for-tat retaliation in terms of tariffs in equal measure or quantum. What other measures, what other roads could they have gone down, do you think?
Well, like I said, I think, if you just talk about the trade balance, China can't match the U.S. The U.S. can always apply tariffs to more goods and services than China can because we import a lot more. Where is the U.S. exposure to China bigger? It's bigger in U.S. firms operating in China because China's investment in the U.S. is a more recent phenomenon. So on the one hand, you have a trade imbalance in China's favor, which means they have more at risk, which is why President Trump says things like trade wars are easy to win. But the investment balance in the long term has been in the U.S. favor. So those are the targets, U.S. investment in China, that's money-making for big American firms like Apple. China can start restricting their activities. It doesn't have to go all the way. There's a lot of money involved. It can just take steps in that direction and see if the U.S. will then negotiate.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.